I'm Justin Hayek, investment advisor with PI Financial. Join me on a ride with today's top CEOs. Hear the stories of their greatest achievements and failures. Get the inside on their secrets to investing and the latest on their next big deal. This is Car Ride Confessions of a CEO. Joining me on today's ride is Dan Wilton, CEO and Director of First Mining Gold, an emerging development company with a large resource of 7.3 million ounces gold in the measured and indicated categories and 3.6 million ounces gold in the inferred category. As an investment banker and partner in a mining-focused private equity investment firm, Dan executed or advised on over $1 billion of financings and more than $10 billion of M&A transactions.
So I started my career in investment banking at Morgan Stanley in New York.
Oh, really? Okay.
Yeah, they had an on-campus recruiting program. I did my undergrad at Queens. And it's kind of how I fell into mining. It's very funny, but I was sort of a generalist in an M&A pool. And it just so happened that in this pool, one of the first deals that came in was a mining deal. And so they kind of looked around and said, well, let's give it to the Canadian kid. He must know something about mining.
Sure.
And there was a little bit of rationale to it because I was going up in my second year back up to Toronto to work for the guy who ran the global mining group. So, that's kind of literally how I fell into mining. The great thing about this industry is that it self-corrects, right? We forget that this is a cyclical business. And it's that pro-cyclical activity that really brings about a really bright future for all the companies that are developing projects in the industry, because there hasn't been investment, there hasn't been any exploration, so there's nothing new. And at some point, the only way that manifests itself in the market is a higher commodity price. In our case, gold price, just based on supply-demand fundamentals.
In terms of your background in the investment banking world and private equity, what advantage do you think that's brought you as now the CEO of a junior mining company?
I mean, I think there's a couple. One of which is we've just looked at hundreds and hundreds of projects over my career. And with, as I said, with some great technical people who've allowed me to learn a lot about how you look at projects. That sense of perspective and deep dive on how to see real value inside projects. And then it's also just some understanding of the investment process and the capital raising process. And it's not just network, and it's not just deal mechanics, but it's really having an understanding of the full suite of alternatives that you have when you need to raise capital. Right. Because we have to be really creative as non-cash flowing developers in this environment. You have to be really creative on how you raise capital.
Why do you think First Mining Gold is so undervalued?
So I think it's size. This is a gold endowment in these projects, which I think is unique. I think it's jurisdiction, in that all these ounces are in Canada and in good jurisdictions in Canada to permit and move mines forward. I think it's team. We've actually put together the team that I think has a real ability to surface value out of these projects, not just our main ones, but part of the challenge of a portfolio is you do need to advance a portfolio.
So there's been some changes in terms of the team and the direction. Maybe you can address that. Why those changes?
Yeah, well, I'll start with direction, because I think direction then determines kind of what you need for the team. So, I can't take credit for this. The company and the board had made a decision to pivot kind of towards development. It really was the brainchild of Keith Neumeyer, and some of the people who watch this will know Keith from his time in this chair as the CEO of First Majestic. But Keith and a few other people had a great idea in what they thought was the worst market for gold projects that they'd seen in many, many years, to accumulate a bunch of projects and warehouse them, and then the price will go up and we'll be able to JV them out, and kind of it was the mineral bank strategy. A couple things happened. Valuations changed from the real depths of 2015. It was harder to find real value in projects. And second of all, as I often tell people, the real challenge was they actually just bought some good projects, right? If you're just going to land bank things, the best things to land bank are really big and really marginal because they will catch that, incremental bid.
Yeah.
And you'll have all that leverage of having the really out of the money option that then comes back. Well, I think the challenge is the team acquired some projects that really deserve to be developed.
Would it be fair to say then the valuations today are even lower than the cost of finding those ounces?
Oh, no, it's interesting you raise that because it's something we haven't been talking much about, but S&P did a great study, and their SNL database is, I think, the best database of mining data in the world. And they did a study going back to 2011 looking at the discovery and delineation costs of basically every ounce that's been discovered and put in resource since 2011.
Wow, okay.
And if you look at that, it's very robust. And you look at that, and I think their total exploration and delineation cost per ounce, and this is around the world, was like $36 an ounce.
We talked about the valuation or depressed valuations that you guys are suffering from, we'll call it today. How do you intend on getting those valuations up? How do you intend on creating value for the company and of course for shareholders?
We need to be doing things that are advancing our projects. You need to be technically de-risking the projects, and you need to be then making sure that you're effectively communicating that.
Yeah. And all of that kind of works itself into essentially adding value. A higher NAV or a higher multiple to NAV.
100%.
Yeah. How would you describe then your job, your role as a CEO? What is your primary responsibility?
That's it's a good question. I think first and foremost, it's making sure that you have the right team working on the project, leading that team in prioritization of where you're going to spend your capital and where you're going to spend your time, and then investor communication of all of that, both around investor communication and capital raising.
The mining market isn't exactly, the sentiment is pretty poor right now. So what do you think is going to be the catalyst that, puts the pendulum swinging back into our favor?
Fundamentally, the big challenge right now is more of a structural shift on the capital provision side in mining.
Okay.
Where you used to have, individuals and you used to have investment funds that were dedicated to investing in mining. You had a dedicated pool of assets that would look to move the next generation of projects forward. That active management pool has really been cannibalized by ETFs and passive management. But in the end, what will save all of us, and I firmly believe this, is fundamentals. In the end, capital flows can not change the overall supply-demand fundamentals of the mining sector.
What is the spot price of gold going to be a year from now? So I guess it would be June of 2020.
June of 2020, $1,500.
So maybe you can elaborate a little bit on the projects in the sense that what is the flagship asset and how do you hope to create value from it?
Yeah, so flagship assets, I would say, two that we're prioritizing right now. Spring Pole, which is a gold deposit with a healthy silver component to it. And it's a large 1 gram, so lowish grade open pit project located not that far from infrastructure, 40 kilometers away from road and power, but in a more or less industrial forest area.
Okay.
And so primarily surfacing value at Spring Pole through done some great work on metallurgy, where we think we can increase the recoveries through a different metallurgical process that the team investigated last year, which I think is going to deliver a lot of value. So we have an updated PEA coming out on that before the end of the year. And the real value catalyst at Spring Pole is ultimately going to be getting its permits. That's Spring Pole, and it's, it's, if it were producing today as it was scoped in the PEA, it would be the third or fourth largest producing gold mine in Canada. Like,
wow,
this
that's
is
incredible.
meaningful. It has potential to produce,
wow,
in some of its better years, 400 to 500,000 ounces a year.
Wow.
This is a major, major potential gold mine. And then Goldlund is, 800,000 ounces M&I and another 850,000 ounces inferred, open pittable, just off the highway. Like, it is a really, really developable project with lots of room to grow.
I've been told that you are a manager and mentor to many of your colleagues. Why is that important to you?
It's always been important to me as I kind of moved into managerial roles, even going back in my investment banking days. I don't know. I've always been involved in recruiting people. Even back in investment banking, it was something that building your team and how you get the best out of your team is something that's really critical, not only to your success and your outcomes, but really critical to your day-to-day enjoyment of your life.
I enjoyed the conversation.
Yeah,
Thank you so
me
much.
too.
Yeah,
Me too. No,
thanks
thanks for doing this. I really appreciate it.